Good morning. It's October the 21st, 2015. Welcome to Real Estate Tips. I'm Wayne Russell, instructor, broker associate with Remax Southwest, Sugar Land, Texas. Most of the information we discuss comes from realtors, newspaper articles, magazines, and emails from different sources. The material provided here is for information purposes only and is not intended and should not be considered as legal advice for your particular matter. The outline that I have here, Real Estate Tips, it's we're going to cover the Municipal Utility District, seller's disclosure, the Prince of Drain, information at Riverstone Service and Utilities, Schools and Community Assessments, and Riverstone HOA annual dues. TRID rules take effect. CFPB, that's Consumer Financial Protection Bureau. Home closing process gets more consumer friendly. Home closing hints, and Texas Real Estate Commission legal update and code of ethics. Before I get started, I think everyone received this in an email, but just in case you didn't, home sellers need to be patient. Homeowners expecting to make lightning fast deals on the sales of their houses may want to have a little more patience. And what's selling today is the homes priced from $150 to $249 and $250 to $499. That's 15% or 16%. Some of them have gone down, like the less than or up to 79, and 80 to 149 is less than 16%, and then the ones at 500 above is off 10%. So just want to bring it to your attention. I think that in addition, home sales market looks more neutral, and you can. This is what page I'm on right now, and then you can read most of this on your own. They say that the median price of a home is the amount at which half the homes sold for more and half for less was $208,000 in September. That's up 4.5% from the same month a year earlier. Okay, there was, as I said, some of this information comes from the newspaper articles, and I wanted to read this one particular one. In regards to mud, I am new to Texas and just signed a contract to buy a new home. The contract had Municipal Utility District disclosure attached, full of gobbledygook about taxes and bonded indebtedness. What's this got to do with anything? Well, welcome to Texas. In new developments, we frequently float bonds for the benefit of private developers to allow them to build new infrastructure for their subdivision. To repay the bonded indebtedness, they levy a mud tax to pay off the bonds. You pay more taxes because this developer and you need to retire the bonds. This is the state of Texas mandated disclosures so that you're aware of the additional taxes. Just in case you're dealing with out-of-state or out-of-town buyers, and they start asking you about all these forms that we have to sign, just show them this article. It may be helpful. This is a sample right here. The notice to a purchaser of real property in a water district. Of course, you've seen these several times, and you'll notice that they put in the mud number, the located in the district, and it's so much per each 100 assessed valuation. Is 0.40 in this one, and usually the bonds that are passed or issued is the larger amount, which is the first fill in the blank that you have, and the ones that's based on payable in whole or in part from the property taxes is usually the lesser amount. But I just want to show you some samples just in case you are just starting to fill out these water district addendums. And of course, make sure that you put the legal description in the MUD addendum, and of course have the buyer and seller sign it. And anyway, this is I just wanted to show you this is a sample. The next one shows the amount, the second MUD shows the larger amount and the smaller amount and the tax rate. And as you notice, sometimes they'll repeat themselves on the taxes, the rate, which is 0.37. They might say it twice, but you don't have to say it, just say it one time. And the second one shows the total amount that was issued, $20 million, and the payable in whole or in part from property taxes is $10 million. And they mentioned standby fees. Usually standby fees are for unimproved property. And anyway, just wanted to show that to you. The larger amounts first and the smaller amounts next. And then the next one is just about a repeat again. It shows the tax rate and then it shows the larger amount issued and the smaller amount from property taxes. And the next one, trying to make them as clear as possible, because the next sample that I pulled up is some is typed, some's handwritten, so try to make it as legible as possible. Of course, they have the larger amount at the beginning and the smaller amount. And then the next one is, I can't even read it at all. Just wanted to show you what some of the realtors are preparing. They've got the larger amount and then the smaller amount, and then they've got a lot of initials, and it's almost illegible. So I mean, try to write as well as you can, and if you get it typed. Sometimes when you're at the listing appointment, you have it blank, and sometimes you'll prepare it before you get to the listing. So try to make it as clear as possible. And so anyway, the next MUD, they got it reversed. They got the smaller amount issued as 13, and they got the property taxes as 24. So they should have just reversed that. What do you think about that, Robert?
Backwards.
Backwards.
That's why it's just sold 13, but they've already sold 24.
Yeah, I know. That's pretty good. Anyway, I've had a lot of questions about the seller's disclosure and what a French drain is. You know, some agents just think it's a French drain is they just have a drain going to the back to a grate and then drain the water from the backyard to the front. But a French drain, I just wanted to bring it to your attention, and most of the question, when you fill this out, most of the time it'll be no. I don't think most owners have a real true French drain. And I just wanted to bring it to your attention, which is a French drain here. The pictures, and if they have something like that, then the answer to that question is yes. A French drain or weeping tile, blind drain, rubber drain, rock drain, drain tile, perimeter drain, lane drain, French ditch, subsurface drain, subsoil drain, agricultural drain. Anyway, the history and construction comes from the Henry Flagg French of Concord, Massachusetts, a lawyer and assistant to the U.S. Texas Treasury. This was in the 1800s. But anyway, that's where the name came from.
Is that drawing like underground?
Yes.
Yes.
Okay, yeah.
Yeah, here's some more pictures of what a French drain looks like. And just wanted to bring it to your attention. French drains are often installed around a home foundation in two different ways: buried along the foundation wall on the external side of the foundation, installed underneath the basement floor or inside the perimeter of the basement. And but I'd say 99% of the time it'll be no for the answer for French drains. Some more pictures of the French drain is right here, the way they're laid out. And I just wanted to just bring it to your attention because a lot of realtors that come to me and says, well, what is a French drain? And then here's some more views of the French drain. And so it's pretty obvious that it's more involved than just a regular drain for the draining water. A lot of times homes are built in the low areas and the water stands in the backyard, so sometimes they'll put in it just to dig a trench and then lay pipe and put a grate and drain the water. But this is a true French drain. Okay. Just another quickie, I'm jumping back a little bit, going to, can you acquire photo ID for a lease application? The landlord for the property I manage wants all potential tenants to submit a photo ID with their lease application. Can I require that? Yes, but you should only use an applicant's photo ID to verify his or her identity and or to check or on criminal history, rental history, or credit history. You must be uniform and consistent with your photo ID policy, requiring it from all applicants. Never use the ID to discriminate against an applicant.
What about Social Security cards? I mean, I've seen some say they want copies of Social Security cards, and some people are reluctant to do that.
Well, they want to disclose their Social Security number because, you know, that's, it's you know, yeah, so, you know, if you're a property manager or you're the, see what the landlord wants you to do if you're going to be the property manager. I just look mainly, I manage a couple of properties, and I don't ask for a photo because I'm going to talk to them in person. When they, you know, they're going to bring me the application, I'm going to pull up the credit score, you know, pull up their credit, and they're going to put up, say, $40 or $50. Sometimes it depends if it's, look in your MLS readout sheet, it'll say on a rental if it's $40 per person or $80 or $70 for a couple.
Well, I was mostly thinking about a listing for a rental.
Okay.
Because I've got a rental listing
Mm-hmm.
in Bombrook Plantation,
Mm-hmm.
and I didn't know if you could actually ask for a copy of Social Security card and all that stuff too.
Well,
Because I've seen it on,
you're gonna have the Social Security number, you know, to pull up,
so the number's just good enough.
on the application, should be.
Okay.
But, you know, we're all independent contractors, so you'll probably end up doing what you wanna do and go from there. But just be careful what you do, because you don't want to get in trouble with trick or anything.
I'm always in trouble.
If you're, if you're selling homes in Riverstone, there's the one particular area that I went by to pick up this information. And a lot of your buyers say, you know, how about utilities, how about the schools, what are the tax rates, et cetera. So I wanted to give this information to you in case you're selling homes in Riverstone. And of course, the Fort Bend ISDs, the Commonwealth Elementary, the Fort Bend Settlement, and Elkins High School. And the community assessment, the tax rate is 3.33476 per $100 assessed value. The homeowners association is $975 per year. And Providence at Riverstone, the HOA, is $300 a quarter. This is in addition to your $900 a year.
Is this the only one that requires this?
Right.
So Providence has to pay basically the $1,200.
$2,100. About $2,100 per year, just the HOA. It doesn't include your taxes, doesn't include your interest, doesn't include, that's just to live there. And they take care of the mowing of the front and backyards, weeding, trim trees, remulch, and lawn and shrub fertilization biannually. So that's part of your $300. It's $100 a month. So if you were paying a lawn service to come out, that would be about $25 a week. So it's about 6 of one or half a dozen of another, unless you want to do it yourself. But if you want to do it yourself, they really prefer.
Better deal than I have.
Yeah, they really prefer to have them done, because then all the yards are uniform and keeps the values up. Luxury living in Fort Bend. Here's some more dues. Let's just say you were selling at the very bottom there, 2015 HOA annual dues, executive and patio homes is $975. Executive and patio homes lakefront is $1,000. Custom homes $1,600. Custom homes $1,600, and it goes all the way up to the enclave at Riverstone lakefront $1,695. So that's your dues. In case your buyers ask you what they are, you'll have this information for them. Now let's get to TRID rules take effect for the Consumer Financial Protection Bureau. The new TILA RESPA. TILA is Truth in Lending Act, and RESPA is Real Estate Settlement Procedures Act. The TILA RESPA Integrated Disclosure TRID rules for mortgage closings took effect for new loan applications for October the 3rd. The Director of Consumer Financial Protection Bureau, on behalf of 6 federal financial regulatory agencies, provided written assurances that the early enforcement of the new rules will take into account the good faith efforts of supervised entities. Anyway, I'll let you read the rest on your own. This is, just wanted to bring it to your attention. Closing on your new home is an exciting time, but it also can be an overwhelming process. Home buyers usually find themselves signing a seemingly endless stack of documents, most of which are written in language not used outside the real estate industry and can be difficult to understand. Fortunately, the process got a whole lot easier on October the 3rd when new rules required by the Consumer Financial Protection Bureau took effect. The CFPB has taken 4 closing documents and merged them into 2. Gone are the good faith estimate and truth in lending disclosures, which have been combined into a new single loan estimate, the LE. That's the loan estimate. So, you know, that's at least now you go from 2 to 1. So the LE must be delivered to the buyer no later than 3 business days after receiving the application. In addition, the final truth in lending disclosure HUD-1 settlement statement have been replaced by the closing disclosure form. This form must be provided to the consumer a full 3 days before closing. And if there are any changes during that 72-hour period, the closing could be delayed. So I would keep, you know, on your third-party financing addendum, the new one that's coming up, I would probably put, you know, or all independent contractors, and some realtors say we have lenders that can close in 30 days. Well, I've talked to a lot of title companies, and sometimes the closing could be as long as 60 days. So In third-party financing, you might put 25 to 30 days, and then in the closing, you might put 45 to 60, depending, you know. And if you're going to say, no, we can close in 2 weeks, well, tell you what, have the amendment to contract ready for you to sign for the extending of the contract, so our closing dates. So have that amendment to contract in your back pocket for changes. Okay, anyway, it's a huge improvement from the old process, and let the HUD-1 settlement be presented to the buyer as late as the day of closing, and allow changes to be made to the statement during the loan closing. So no more changes at the last minute. The top, these are some more information here too. You probably are familiar with some of these, but it's always good for review. The top 10 list gives home closing hints. We talked about, I'm going to go down to the first one here. It says, time is of essence. To avoid delays or postponement of your closing, be sure to respond to lender and settlement company requests immediately. You have a choice when it comes to service providers associated with your closing. You have a choice. This includes the company or attorney that will close your transaction. In other words, closing choice of your title companies. Protect your information, secure emails. In addition to security measures to protect your non-public personal information, you may receive secure emails from your lender and settlement service provider. You will need to follow the instructions for retrieving that information, which will likely require you to create an account and make sure that you return any information through the secure system, email system. Loan estimate. Loan estimate is the LE will be sent to you within 3 days of your loan application. The terms provided on LE will appear on the closing disclosure, the CD, and lenders are required to explain any changes in fees for the CD. Prepare for closing. Approximately 10 to 14 days before you're scheduled to sign your documents, you should be prepared to communicate with your lender and real estate agent and settlement professional. It will be important for you to provide your hazard insurance information. Closing disclosure, the CD. The CD will be sent directly to the buyer consumer and not your real estate agent. So just make sure that you'll be able to preview that. Just talk to your buyer and see if he can, or actually you can get a document signed by your buyer to release the information to you. I've gone over that before in previous classes. 3-day review period. The CD must be delivered in buyer consumer at least 3 business days prior to signing. The CD is delivered via email and important to acknowledge receipt to avoid additional delays. The CD may be mailed 7 days in advance and does not require proof of receipt. Lender's title insurance. Lenders typically require the buyers to purchase a lender's policy. Years ago, it was a mortgagee's title policy, but they call it lender's policy, and that's for the buyer, and that's to protect the lender. The title insurance of purchase loan. The fees are usually based on the amount of the loan. However, a lender's policy protects only the lender's interest and should a problem with the title arise. Owner's title policy, research and value, and the importance of owner's title insurance policy early on in the process of obtaining a loan and closing on the purchase of your home. This home buyers often assume that the lender's title insurance policy protects them from challenges to their ownership rights in the property being acquired. This is not the case. Instead, the home buyer's interests are protected by owner's title insurance policy. And that's why you have to read the title commitment to see exactly what there are exceptions are in your title policy. The cost is typically based on the home's total purchase price and at one-time fee paid at closing. The State Board of Insurance regulates most of your title companies and the rates that you have in there. Let's just say it's a $100,000 sale. The rate is regulated by the State Board of Insurance, and all the title companies charge the same amount. I'd say it's a little less than 1%. It's about what, 900, Robert, for 100.
Okay, yeah. It's a little bit of a moving scale. The higher the price.
Right. It goes down. Right. So and then the escrow. Now I'm not talking about escrow for taxes and insurance, but the escrow for what the title company charges ranges from say $250 to $350. The reason why I'm telling you this is because some different title companies charge different rates, and then also too for closing costs. Your closing costs, could vary if you're say the real estate fee is 6%, and let's just say you close in January the 15th. Well, your proration for taxes, if the tax rate is say 3%, your tax proration for January the 15th is a half a month. So therefore, the closing costs will probably run you about 8%, not counting paying the purchaser's closing costs or repairs or anything like that. But just normal closing costs will run you about 8%. But if you close, say, December the 30th of the year, then you have 3% of the tax rate. Say 3% of 100,000 is 3,000. So I mean that's 3 points right there, plus the commission of 6, plus the title policy. It might run the seller a little over 10%. So, and it depends on where you are. Let's just say you're. I've talked about Riverstone. Well, they have in Sienna Plantation they have foundation fees, which is added to your seller's closing costs. Could run a quarter of a point in Riverstone and a half a point in Sienna. So I mean, depends on where you are. So I mean, closing costs could vary depending on the time of the year you close. Okay. Let's cover a little code of ethics. The Grievance Committee. Note that the Grievance Committee does not hold hearings, but simply conducts meetings in which complaints are reviewed on the basis of written information provided. There are no personal appearances, witnesses, or testimony at the Grievance Committee level. The Professional Standards Committee. The Professional Standards Committee also comprised of realtors appointed by the association president. The Professional Standards Committee holds hearings on complaints forwarded by the Grievance Committee. Through the hearing process, the Professional Standards Committee decides whether there has been a violation of the Code of Ethics. And the Professional Standards Committee is small. The entire committee may hear each case. It is a larger committee. The committee is divided into hearing panels. There must be an odd number of hearing panel members, so usually there are 3 to 5 persons on the hearing panel. We'll use hearing panel to denote the group which conducts hearings to determine whether a violation of the code occurred. And hearing panels must provide a member's charge called respondents with the due process hearing. This means that the hearing panel must follow rules of fairness and allow respondents to defend themselves. The ethics hearing, knowing the nature of the complaint in advance. Examples of due process include knowing the nature of complaint in advance, an adequate opportunity to prepare a defense, the right to present evidence, the right to cross-examine, the right to legal counsel, impartial peer panel, access to appeal process. To find a realtor in violation of the code, the hearing panel must find that there is a clear, strong, convincing proof that a violation occurred. The standard of proof is higher than the typical civil court action, but somewhat less than the standard in a criminal case, beyond a reasonable doubt. The ethics hearing, after receiving all the evidence and testimony, the hearing is conducted and the hearing panel meets privately to determine whether a violation of code was proved by clear, strong, and convincing proof. If the hearing panel finds the respondent in violation of the code, the hearing panel must then recommend the discipline that will be imposed. Okay, and then one more thing. This is the Mce Legal update, and I just wanted to go over this real quick, like from the Texas Real Estate Commission. Right here is the acknowledgments, but the next one is the contents. And quickly, I think that when you get a chance, you might want to look at this. Legislation changes authorizing broker agreements for the sale of real property at certain municipalities, auctioning real estate, the Texas Uniform Condominium Act, Property Code, borrowing money. I'm going to let all of you read this, most of this on your own. Owners associations, new foreclosure for sale rules, timeshare, real estate inspectors, the appraiser disclosure requirements before an ARB. House Bill 585 amends current law relating to ad valorem taxation, especially the provisions of tax code dealing with tax protests before an appraisal board. Anyway, I just wanted to you just be aware of this. In Chapter 2, you've got new broker license requirements. I've been a broker since '68, so I guess I consider myself lucky. Back in the 60s, early 60s, you could just take a test and you're a broker. And then in the middle 60s, you took a salesman's test, and then you worked under a broker for a year, and then you could take the broker's test. Well, that's what I did. And then the next following the next year, they started requiring classes from 30 hours to 60, and now to be a broker, you have to have 3,600 points, and it explains how many sales you have to make to become a broker, and of course you have to pass the test.
That's when my dad tried to talk me into doing real estate.
There you go.
I should have listened to him.
License buying, selling, and leasing property for themselves. Broker price opinions, BPOs. Final mortgage rules, CFPB. I've got in here that the standard mortgage must have a term of 30 or fewer years, a fixed rate interest rate on at least 5 years after consummation. Points and fees are generally kept at 3%. The reason why I want to bring that up, because a lot of times in your third-party financing addendum, a lot of your realtors will put in 1, for the cost, 1 point. And that's, if it exceeds that, then that's a get out for the buyer. So pay attention to not only to the contract, but the third-party financing.
What about when they put market?
Well, you don't know what the market is, so it could be 5, could be 7, could be 1. You don't know. So I mean, but I would try to get that as high as you can if I'm the listing agent, and if I'm the buyer's agent, I'd like to put 1, so I have a get out for my buyer, because if it exceeds 1, you get out. So pay attention to your third-party finance. That's why I'm going to bring this up to you right here. It said the standard mortgages must have terms of 30 or fewer.
Ryan, where are you, please?
Huh?
Where are you?
Right here on page 9.
Okay. Thank you.
9 at the top. And it says the standard mortgage must have a term of 30 or fewer years, a fixed rate interest rate for at least 5 years after consummation. Points and fees are usually kept at 3%. If you talk to lenders about closing costs, I've talked to you about what it costs to sell, but to buy, say, a $100,000 house or something like that, saying it's 5% down on a conventional loan, then the other cost will be another 5%. So you're really putting down $10,000 on a $100,000 house. This without assistance programs, without seller paying the closing costs, just a normal deal. It's usually 5 and 5, somewhere in that range. It could be a little less, could be a little more for your closing cost. And sometimes the buyer waives the escrow. When they put, say, 20 to 25% down, they'll waive their escrow, and they want to pay their taxes and insurance on the side. So the down payment.
40% or more.
That's right.
That's been the rule in the past.
That's right. So, and also to avoid the PMI. So, anyway, I just want to bring it to your attention. The rules for business entities, education standard advisory, justice court changes for eviction, mediation. Of course, in the contracts years ago, you could have a check that you wouldn't mediate or would, and then now it's mandatory. It's you mediate. And hot topics, choice of title company. The choice of title company is negotiable, and I would say 99% of the time, the person that's paying for the title policy, usually they end up getting their choice, but everything is negotiable. I mean, the buyer could insist on a certain title company. So sometimes you can't get past who's paying for the title policy or what title company you want to go to. So that's
Closest one to the office.
That's right, and everything is negotiable. The choice of the title company, addendum for property subject to mandatory membership in a property homeowners association. Too, if you have resale certificates, and you have foundation fees, and you have different fees when you sell, and it's a lot of times the sellers will just go to the HOA addendum and it spells it out. Well, if you have $250 in there and the seller pays the rest, well, the seller will be paying the rest. So you might want to spell out in your special provisions who's paying for the foundation fee of a half a point or a quarter of a point. So you might, and then who's going to pay the cap fee in buying? There's a lot of times different subdivisions have cap fees. So tell your buyers so you can be aware of this, because they don't have any surprises at closing. So as I said, let's just say it's 100,000. Riverstone is not 100,000, but let's just say it's, hypothetically speaking, it was 100. Then you're saying, well, it only cost you 5% down and the 5% for prepaids and setting up escrow and taxes and insurance. And then all of a sudden the builder says, oh, by the way, we have a cap fee. Well, a cap fee is equivalent to about $250 plus a year's HOA. So it runs in the neighborhood of about 1,200 to somewhere in that range for your cap fee. So anyway, and then also too, let's just say you get certificates of compliance. Well, certificates of compliance from different subdivisions, who's going to pay for the repairs? You know, the title companies will issue title with conditions in the certificate of compliance. Well, I like to put in special provisions that the seller will take care of these prior to closing, because who's going to take care of them after closing? Your buyer. So try to get these things cleared up and put in special provisions. Now, the TREC is making special provisions. It used to be quite a bit, but now they've reduced it down to just a minimum amount of wording that you put in special provisions. So you may have to put in an amendment, or you may have to put in, type it small. But try to have an understanding who pays for what, so you don't have a misunderstanding at closing. See right here at the next one, it says addendum for property subject to mandatory membership. Well, you got down here on number C, item C, it says buyer shall pay any and all assessment fees and other charges associated with the transfer fee of the property not to exceed, well, you put $250, and this says, and the seller shall pay the any excess. So try to tell the seller that, you know, let's just say the buyer pays the first $250. Well, how about community enhancement fees?
What do you think about 50%?
Well, I know, and some of them put $1,200, depending on, you know, because they want to make sure that they want to get the buyer to pay the foundation fee. But, you know, how about if I'm the buyer, I don't want to pay the foundation fee, you know, because the seller's been there and it's in the deed restrictions, and the seller's aware of it. And so I want to make sure that that I just pay the minimum amount. So, you know, everything is negotiable. So I just wanted to bring it to your attention. If you put $250 and you're dealing in certain subdivisions, that be aware that the seller will have to pay most of the time the foundation or community enhancement fees. Okay.
Wait, before you move on, this addendum for property subject to mandatory membership in the POA, if you check this first, number 1, that the seller will provide the following subdivision information.
Yes.
And if they don't, where do you, if they say they don't have this information, where do you go to get this kind of information?
HOA.
If you're representing the buyer?
HOA.
Okay, all right.
And if they don't provide it, then you have a get out.
Okay.
It says right there, have you read the whole
Yeah,
paragraph?
I read it.
Okay,
Yeah.
it says if the buyer does not receive the subdivision information, buyer's sole remedy may terminate the contract.
Yeah, well, they didn't provide it.
So you can
I'm
terminate the
representing
contract
buyer.
within X days that you put in there. Say you put in there 10 days, 15 days, 100
5
days,
days, I don't know.
whatever it is, and they don't provide it, the buyer can back out of the
Well,
contract.
it doesn't want to back out, so go to the HOA or the POA to get
Did you
this
say?
information.
It's number 1.
Did you check box 1?
Yeah.
Okay, we'll call the listing agent.
Okay, no, they don't have it, that's what I mean, they don't have it, so call the POA.
They don't have it, but they need to go to the HOA and pay for it and have it delivered.
Well, what she did is sent me a link yesterday to the HOA or the POA and told me to go get it myself, so.
But you need to tell her it's in the contract that the seller will provide it.
Whatever, but anyway, I printed it out.
Well, you put if you want the monkey on your shoulder to do the things that's not in the contract, that's up to you.
Well,
I keep the monkey off my back and I go by the contract, and then we're going to sit there for months and months and months. And you know where that seller's going to go? They're not going to be able to sell the property. You know why? Because you clouded the title.
mhm.
If you want to go any further, you can file a less pendants, and I've already gone over that in previous classes, that you can file a less pendants and never sell it. Go by the contract.
Yeah. Well, unfortunately, I'm past the 5 days.
Well,
So-
there you can terminate the contract.
They had 5 days to give it, not 5 days to terminate.
Right.
Yeah,
But you
Just
could.
send over that page to it.
I've already got it, so I
Okay.
don't, that
Well,
wasn't
then
my question.
what's the question?
My question was, when it's talking about restrictions, are they talking about deed restrictions?
Yeah.
Okay, all right, and, okay, well, I never did get that, so I got some covenants conditions
does the
and
buyer want-
restrictions, and I got bylaws, but I never got any deed restrictions.
If you got the restrictions, you got the restrictions.
Well, anyway,
No, I
if
don't
you,
have any restrictions.
Right.
I got, here's what I got.
what, and that's okay, you can explain to me after class.
Yeah, let's,
Yeah, let's go a little bit further.
Well, is covenants, conditions, and restrictions the same thing as deed restrictions?
Well, ask the title company. I'm not an attorney. Ask the title company.
Okay.
Typically, yes, in Texas, other states probably not.
But ask the title company to answer that question, because,
Covenants, conditions, and restrictions.
right, ask the title
So
company
those are deed
and
restrictions?
then ask the HOA.
Okay.
But usually there's restrictions on all properties.
Homeowners, just single-family residential, means you can't live in Joe's Fitz Company or Watts.
Right. Right, and then, now a lot of, sometimes restrictions in certain areas are not enforceable because the HOA is not there and the restrictions are still in effect. And I can give you an example. At Bissonnette and the Southwest Freeway, there's a subdivision called Country Club Villas where you have a lot of industrial and commercial development. And those restrictions are on there, but no one ever paid any attention, so they built warehouses and everything else on there, and they just didn't pay any attention to the restrictions, but I don't think that would happen in First Colony. Okay, email negotiations, oh yeah, I wanted to go over this, because emails are like contracts, so be careful what you say in a contract when you're negotiating the price, because I think it's important for you to get in touch with let's just say you're representing the buyer or representing the seller, and you're negotiating the price. I would contact the other agent and tell them verbally, instead of sending them, okay, we'll take X dollars. Well, let's just say you said that you'll take $100,000 for the property, and you put it in your email. And then, so it takes them a while to get the paperwork together to you, and then you have another offer of 110. Uh-oh. So just be careful about emails. Can an exchange of emails between parties to a real estate transaction, either directly between the parties or through their brokers, constitute a binding contract? The question has been subject to some debate, and more cases involving uniform electronic transactions are being litigated. To definitely answer the question, a review of the specific facts involved in a particular situation must be reviewed. Generally, there are 5 principles that courts will review and discuss, and I'll let you read this on your own. The purpose, the law of contracts, electronic signatures, satisfaction of contract elements, the authority of the broker, clarifying emails, and case studies. So I'll let you read this on your own. Handling trust and property management funds. Make sure you don't commingle your funds if you're a property manager. What should happen with an agent changes broker? Check the trick rules first. Terminating a salesperson association with a sponsoring broker. Craigslist leasing scams. And the form changes trick number 2012 1-4 family. I've gone over that before, but I'll go over that again in the first week in December in color, so that we can make sure we're familiar, because it's going to come out in January. January is when it's coming out with the new changes on the 1-4 family. So I'll have the first Wednesday of December, I'll go over all those new changes again. New home contract, unimproved property contract, the subdivision information, resale certificates, third-party financing, addendum. I talked about third-party financing, and also resale certificates, farm and ranch contracts, residential condominiums, reverse mortgage. I doubt very seriously too many of us will be having reverse mortgages. I did sell a house that had a reverse mortgage, but those reverse mortgages cost money. They cost about, I'd say, pretty close to 10%. So, you know, on reverse mortgages, and I'm not in favor of that. One of the actors on the television endorses reverse mortgages. But anyway.
What about people that maybe didn't have any children? And they don't have anyone to leave their home to,
Right.
so.
Do they want the home? If they want the home, they have a reverse mortgage, and they have to pay it back sometime.
Yeah, I'm just saying they probably die before they pay it back.
Well, whoever inherits
They have
it.
no heirs. So.
Right, well, I guess it goes to the state if they don't have any heirs.
Mhm.
As is seller's disclosure, I'll let you read that on your own, but the as is clause in contracts does not defeat the reliance element of statutory real estate fraud for information omissions in the seller's disclosure. In other words, if you're, you know, when you say as is, that means as is, but I mean, disclose things that are relevant to that, to your property, to your house. whatever you're selling. Buyer representation or misrepresentations, right here. Anyway.
Did you go over splitting commission with buyer?
Well, I'm just gonna let you read that on your own. You can do that. Attempt to convert separate property to community property, a risk caused by certain pets. I'm leased, as I said, I handle properties, and my properties are conditioned of no pets and no smokers, but everything is negotiable, but in my scenario or my lease, I just have no smokers and no pets. Real estate license required for business broker to sell real estate. Stigma damage may be awarded for remediated property. Listing agreement protection period. Oh, that listing protection period, you're gonna have to provide a list of buyers to the owner if you have a protection period. Not just a bunch of realtors that's called on to show the property. These are individual owners that you've contacted to buy the property. So if you have a 30-day or 60-day protection after the listing has expired, you have to submit that list within a reasonable time. You have to read your listing agreement. If you don't do that, then you're not protected on anyone. So make sure that you do send them a list of the buyers, not just 10 realtors that show the property.
That topic was covered on this newspaper clipping that you handed out.
Okay, good.
But you marked through it, but, yeah.
Right. That's why I tried to, so I don't repeat myself too many times. And failure to disclose prior termite infestation and damage. Oh, by the way, too, on the conventional loans, sometimes when you have conducive conditions for termite infestation on a conventional loan, they may not ask you for a treatment, but on a FHA loan, if you have conditions for termite infestation, then you may have to treat. So, I mean, tell your owners to try to remove all the debris around the house and the garage, leaves and debris, and then make sure you're about 2 inches below the weep holes, because if you're not, on FHA, they'll want you to have a treatment, because you have conducive conditions for termite infestation, but on conventional they may not. So try to have the clearance around your house 2 inches below your weep holes. Okay, that's about it, folks. So appreciate you coming and enjoyed the class, and we'll see you very soon. Thank you very much, and have a good day. Talk to you later.